There's a call for banks on the African continent to embrace non-financial disclosures. According to UN estimates, Africa needs an incredible $7 trillion a year to achieve its sustainable development goals by 2030. $6 trillion of this is reliant on the private sector, particularly banks and financial institutions. Advisor Sandra Villars speaks to us about this. Thank you so much for your time this morning, Sandra. Let's first start with what constitutes basically what is known in the terminology of non-financial disclosures, rather.
Yeah, absolutely. Good morning to you. So when we think about non-financial disclosures, this really is information that banks put out externally or in the public sphere. So where they are reporting on aspects of the business that are not directly about the financial statements and financial performance. So you would typically see banks putting out information about their social, their developmental, or their environmental impact that they believe that they are having in the places that they operate. And maybe just to give a couple of quick examples there, they could be telling us, for example, this is the amount of financing that went to women-owned businesses last year, or they could be telling us that we have decided to screen out a certain amount of lending this year because we think that could constitute a harm to the environment that can't be reduced sufficiently or can't be managed.
So essentially it speaks to a broader reporting by financial services in this regard, and I'm interested in how that also then fosters transparency with the thinking that it will essentially give the greater public knowledge of who they want to be in business with as well as investors. Absolutely.
So banks really need to think of the broader stakeholder set that they're dealing with. One of the important stakeholder groups in that is investors. And a lot of investors increasingly are finding that their hands are tied in order to put investments into other institutions that don't align with their values or that don't meet certain ESG requirements or that can't help them report against their own requirements. So just looking at the broader stakeholder set that banks increasingly need to think about, they need to think about investors, they need to think about their customers, they need to think about their employees. And these are all groups that, by the way, are increasingly younger. And we know that there's a generational shift in the way that these stakeholders are thinking about these issues.
You're quite correct there about a younger ilk of investors as well as economic participants. And it brings me to a question about the change in dynamics where ESG has become a deliberate part of efforts that are aimed at fostering a new way of doing business.
Yeah, absolutely. I think increasingly you will find that this is not really optional for banks. It's really something that they have to, you need board members and executives to stay ahead of and get in front of in order to be, particularly if they want to be a leading bank in this space.
Having said that, has the banking industry embraced this, especially because there is now an ongoing call for such, especially thinking of meeting those global development goals by 2030? We are only sitting in 2023. It doesn't leave too much time.
Absolutely. We are facing significant shortfalls in the amount of investment that's needed. And it's interesting because what you see, so Oliver Wyman polled a number of bank executives, institutional investors, and sustainability leaders. And what we found in Africa is that there's a huge recognition of the importance of non-financial disclosures and good quality of non-financial disclosures, but there's still a huge gap. So a number of them kind of struggled to even name good examples of that. And I think what we're also seeing is, yes, regulation is still quite young in this space for a number of reasons, partly kind of the need for further convergence and the need for capacity around monitoring. But we think that in and of itself presents an opportunity for leadership on transparency and disclosure.
Let's talk a little more about the regulation that is lacking there, because it then directly affects reporting and monitoring, and that's the reason why we may, as a continent, be moving at snail's pace in this regard.
Right. So I think we are seeing in general globally that regulation is starting to converge. A lot of people are often talk about the alphabet soup of standards and frameworks. I think what you are starting to see is some convergence in some consolidation in frameworks. You have a couple of regulators in Africa, banking sector regulators, that are already piloting standards on sustainability, governance, and risk management and reporting. So they will probably continue to revise and update those. So you will probably see some push from the regulatory side, but at the same time, I think you are also seeing a few banks that sort of get the bigger picture and on a voluntary basis are starting to embrace these standards. It has been slow, but I think we are likely to see some pickup in that.
It is the pickup that much of the investor community on the African continent is looking to see. Sandra Villars is a senior advisor at Oliver Wyman, talking to us about this call that's been made for banks on the African continent to embrace non-financial disclosures.